Hey guys, my name is Nicolette Mashile. I am also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today we're talking all things income protection. Now before I get into the video, please remember that none of my videos constitute as financial advice. If you are, however, looking for financial advice, please speak to somebody that is certified and registered with the FSCA to give you financial advice. So did you know that your most important asset that you will ever own is not your fancy car? I know it's your dream car and you absolutely love it, but sadly it's not. It's not even the house you have on the most expensive street in the country or the most well sought out estate. It's not even your investment, sadly. It is your ability to derive an income, your ability to make money. Let me give you an example that actually proves this point. So when I get hired by financial institutions to go to universities and speak to students, do you know which students they actually speak to? They speak to those students that they know are going to potentially be high income earners. I know it sounds terrible, but that's really just the reality of life. Did you know also that many companies are moving towards a different credit rating system? So in the olden days, your credit score was literally based on your history and how you behave when you are given credit, right? They also looked at obviously things like credit inquiries, credit utilization. But one of the biggest ones was, do you actually behave when you're given credit? That has now shifted. Many institutions now, including car financing companies, are giving loans, or rather attributing a credit rating to professionals who have certain degrees because of their potential high income earning. So the ability to earn is quite a very, very pertinent an important asset to have. So think about if something is to happen to you and you are unable to do the job that allows you to derive the income. So this could be in the workplace. You could maybe get ill. You could get into an accident and be declared temporarily disabled and you are unable to do your job. I, for instance, work in the space where I speak a lot. So if I contracted something like laryngitis, I'm in trouble, especially if I've got booked gigs. That means that I can't work because if I can't speak, I can't work. So no work, no pay. I actually experienced it a couple of years ago when I broke my ankle, right? So I was temporarily disabled because I could not walk, which means that most of the work that I could do that needed me to be somewhere else, I could not do. So I ended up actually forcing myself back to work within 3 weeks of my operation. And mind you, I had a major operation done. I had dislocated my leg or my foot or my ankle I had broken it in 2 places and dislocated it. So the fact that I was not able to work meant that I could not derive an income. And it meant that I had to dig into my savings and potentially erode savings that took me years to accumulate, simply because who is going to pay for my life if I'm unable to work and derive the income that I usually do to pay for those things? Now, yeah, the argument is that, well, South Africa has got one of the most sophisticated financial services sectors. Any financial loss or, an inability to earn an income to pay for certain things, those certain things have insurance policies that are already prescribed to them. And you're correct. A car has car insurance, but that's in an accident. What happens to the installments that you need to pay every month? Okay, maybe there's credit life insurance, but some people might not have credit life insurance. Or your credit life insurance terms and conditions might say that they don't pay out unless there's a death or perhaps maybe there is a retrenchment. Okay, what about school fees? Medical aid can pay for your bills at the hospital, but medical aid is not going to pay for your living expenses. So all of those things, insurance policies, you need to be able to pay for insurance policies. Yes, some of them might freeze those payments or premium payments, but they're not going to freeze them for a very long time. So you need to be able to have some sort of insurance policy that responds to this kind of situation. If you find yourself in a situation where you are unable to derive an income, you most probably need to consider something like an income protection policy. This is a policy that steps up when you are unable to derive that income. It replaces that ability for you to derive the income so that it does not disturb and interfere with your life and the things that you should be achieving in your life, right? It also allows you not to have to dig into your savings, or now you have to start cashing out your investments because you did not have some sort of policy that would give you an income while you are unable to derive that income. Where do you get it? Well, most insurance companies have. They either have it as a standalone product or they have it as part of your life insurance policy. So if you've got a comprehensive life insurance policy, you may find that you do have an income protection plan in there. Some don't pay 100%, if maybe many don't pay 100%, but 70% of your income is better than 0% of your income. Now, in the olden days, the income protection only looked at people who were employed. But in this day and age, insurance companies have realized that that is no longer the standard. People are no longer just in employer-employee relationships for them to be able to make money. We're in a gig economy. People are working different. The ways of working have shifted. So now it is available even to sangomas, entrepreneurs, content creators, the hustlers of this world. If you are able to pay that premium and you can identify how much your income is every single month, and you take out a premium that covers you for that, you will be able to claim from that insurance policy. Of course, subject to the terms and conditions of the policy that you have taken up. I'm going to leave it at that. I think it's quite a pertinent product, something really worth considering, especially when you are a working individual or you are somebody who is like in your 30s and above and you've already got other things you need to pay for, like children, school fees, transport, nanny, petrol. There's a lot of things that we need to be paying for that are outside of any other policy that can step in if things go pear-shaped. So yeah, I'm going to leave it at that. I'll see you guys on the next one.